Everyone thinks Nvidia's story is already written. They became the king of AI chips. They hit a $2 trillion valuation. And now it's just a matter of managing expectations, right? Not even close. Because something is happening right now that almost no one is talking about. It's not earnings. It's not a product launch. It's something bigger. And it might flip Wall Street's entire narrative. But to understand what's coming, we have to start with the lie everyone believes about Nvidia. The lie is that Nvidia is overvalued. That's what all the headlines are saying, that Nvidia is priced for perfection, that the upside is limited, that it's too late. But let me ask you something. If a company is dominating the most important tech wave of our lifetime, if it has the highest margins in the chip industry, if it has global lock-in through proprietary software like CUDA, and if its valuation is lower than its own historical average, is that really overpriced? Because right now, Nvidia trades at a PEG ratio of 0.74. That's not just low, it's lower than Meta, lower than Apple, lower than the Magnificent Seven's median. It's also well under the 1.0 PEG threshold that most growth at a reasonable price investors look for. So if you're a growth investor looking for a reasonable price, this isn't just reasonable. It's a flashing green light. And yet no one's buying. Why? Because of one word: regulation. Ever since the US started restricting exports of advanced AI chips, people have been terrified. What if Nvidia loses China? What if their most advanced GPUs can't be sold overseas? What if demand collapses because of politics? And on paper, those concerns sound legit. Nvidia made over $17 billion from China in 2024. And with tensions rising, especially around AI, the market assumes that risk is only getting worse. But here's the thing, it's already priced in. Nvidia's valuation multiple has compressed even as earnings rise. And most of the China exposure, it's tied to data center chips like the H20, a small part of their total product line. Gaming, auto, and other segments are largely untouched. But there's one detail almost no one knows. The current export restriction rule, the AI diffusion rule, is about to change. And this is the real story. On May 15th, the US government is expected to revise the AI diffusion rule. And if you're wondering what that is, it's the regulation that categorizes countries into 3 tiers and limits how many AI chips each group can receive. Tier 1 is full access, including US allies like Taiwan and Japan. Tier 2 has capped shipments, and Tier 3, countries like China, Russia, and North Korea, are essentially blocked. So far, it's been one of the most aggressive tech policies in US history. But the new revision, it could flip the script, because based on recent negotiations, lobbying efforts, and statements from the Trump administration, there's strong reason to believe the revised rule will be less restrictive, not more. Why? Simple. Economic leverage. Trump's platform centers on competitiveness, deal-making, and cutting red tape. And the current rule isn't working. It hurts U.S. innovation, it pushes allies toward non-U.S. suppliers, and it barely slows down the countries it's trying to restrict. That's why insiders expect the U.S. to shift from a rigid tier system to a bilateral licensing strategy. In other words, instead of blanket bans, countries will negotiate directly with the U.S. for access. So that's a massive win for Nvidia, because instead of losing customers overnight, they get negotiated re-entry into dozens of global markets. And here's where it gets even better. Even if regulation doesn't change, even if they never ship another chip to China again, Nvidia's future is still secure. Why? Because of CUDA. This is the proprietary software stack that almost every AI developer uses. And once you build your infrastructure around CUDA, switching is painful, if not impossible. This is Nvidia's real moat, and it's why they're becoming more like Microsoft than a chip company. Because in a post-Moore's Law world where raw compute is hitting physical limits, Nvidia is shifting to software lock-in, developer ecosystems, and platform monetization. That's why they've launched things like Nvidia AI Enterprise, Omniverse, industrial digital twin platforms, and custom LLM services. These are high-margin, recurring revenue software plays, and they're just getting started. Which brings us back to May 15th. If the export rule is revised and it loosens Nvidia's restrictions, expect a surge in guidance, a reset in valuation multiples, and possibly one of the biggest single-day jumps we've seen all year, because right now the market is pricing in the worst-case scenario. But if that scenario disappears, it's not just a bounce. It's a full-on re-rating. Nvidia goes from chip company under fire to global AI infrastructure leader. And when you combine that with a PEG ratio well below 1, dominant market share, a software moat that's growing by the day, and a geopolitical tailwind that could reverse overnight, you've got a setup that's rare, even in this market. So no, Nvidia's story is not finished. It's about to enter a new phase, and it starts on May 15th. If you want a breakdown of the exact tools Nvidia is building and how developers are making fortunes using their platform, I'll link everything below. And if you made it this far, comment Coup de Kingdom so I know you're watching the long game. I'll see you in the next one.